Hi everyone, welcome back to our second session on how to buy your stocks using a brokerage account. I'm sure you will all be very excited to know about this. Topics that we will cover in this session are how to determine the type of brokerage account that you will need and compare costs and incentives of the various brokerages. And third is fund your account. And fourth is the placing the order. There are different order types when you go into a brokerage account. So what are the order types and what it means? And fifth, again, with respect to placing the order, like what are the timelines that you can place the order for? And last but not the least, but the most important, we will show you a demo using Fidelity brokerage account to show you how to place your stock trade in the brokerage account. There are different types of brokerage account. One is the traditional brokerage account, which is the cash account or the margin account. And there are retirement related brokerage accounts like a traditional IRA account, Roth IRA account, and you have for self-employed people, you have simple IRA or SEP IRA, or you have an individual 401k account. We will be covering these retirement accounts in a separate detailed session. That will be a separate video covering all those aspects. So in this, we will focus on the traditional brokerage account. And there are two types of accounts you can have, which is a cash account or a margin account. As I put a note, a margin account lets you to borrow money from the broker in order to make your trades, but you will pay interest and it's risky. For example, if you have $2,000, I'm just giving a rough example, you might be able to borrow up to another $2,000. So $4,000 you can invest, but there is a interest that you pay on the borrowed money. And if the market comes down suddenly, there is a chance of the brokerage liquidating your stocks to protect their equity, to protect their $2,000. So if you're a beginner, I would advise it is best to stick with the cash account first, and then slowly as you get experience and more comfort, then you can look in about adding a margin account to a brokerage account. Now let's compare the cost and incentives of the brokerage account. Currently, almost all of them offer commission-free trading for stocks now. So there is no difference between the various major brokerage account. For options, some of them may charge a small fee like a 50 cent to 75 cent per contract. Again, options is a different ball game. It's a little advanced area of investing, and we will cover them in the future sessions. So as of now, we will limit ourselves to the stock trading, as most of you could be beginners. The popular brokerages accounts are Fidelity, Charles Schwab, Interactive Brokers, Robinhood, some of the very popular ones. What I have given below is a link from NetWallet, which you can click and go to the NetWallet site, and then they have compared some of the brokerages. And based on that, you can choose the right brokerage that will be suitable for you. We will be using Fidelity to show how to place the trade in today's demo. If you use something different, still the process will be almost similar. And just to add, even NetWallet have rated Fidelity as one of the top brokerages based on the rating. And once the brokerage is decided, apply online in the brokerage. You can go to the brokerage website and then apply online. And it'll ask you for some of your basic details, your name, address, age, SSN, and your employment details and all those things. And it is normally a very quick process and just takes a couple of days to have your account set up. And most of the brokerages allow to create a zero balance account to start with. Once you have the account set up with the brokerage, the next thing is to fund the account. To fund the account, you have the following options. One is the EFT, which is like linking your checking or savings bank account to the brokerage, and then you can transfer it directly. It might take a day or two, but this is free and is a preferred way because you might frequently try to transfer money between your bank and the brokerage whenever you want to invest in some additional stocks. And the other option is a wire transfer. This could be the fastest method, but could involve some charges from the bank. So you need to check with the bank and see what are the charges involved in that. And the third option, most of the brokerages could give is also checks. You can deposit a check either in person in the brokerage office, or they could give an option to do it online through the app, brokerage app. Once you have the brokerage account, you should know something about the order types before you place the order. There are different types of order types that you can use when placing the order. One is called the market order, which executes at the next available price when the market is open. So you place a market order, say for Apple, and it currently trades at 100, and you place a market order now. If Apple just jumps to 105, your trade will get executed at 105. I'm just giving you an example. Okay, so normally that is risky. Market order is very risky because if the market is volatile, then you could end up with a price that you are not comfortable with. Second option is a limit order, which is a much safer and is the most popular. It sets a maximum price at which you are willing to buy or minimum price at which you are willing to sell. Say, let's take the example of Apple itself. Now it's trading around 150, and say you want to buy Apple, 100 shares of Apple, but you don't want to go beyond 154. Currently it is trading at 153. So you give a limit price of 154, so you are kind of protected, like it will not buy anything above 154. Or if you want to buy at a lower price, you're willing to wait in the fluctuations, so even you can even put 150. So when the price comes down to 150, if at all it comes, then you might get the trade executed and you might be buying Apple at 150 instead of 153, which is the current price. The same logic applies to selling. When you have Apple, 10 shares of Apple, and you want to sell it, you can say that I want to sell only if it goes above 160, and you can give a limit price of 160. And currently it is 153, and when the market moves up maybe after a week or two, and it might get executed. But if you want to sell it urgently today, then you might have to give it somewhere close around the 163 price to have it executed. The other two we will cover in an advanced session. They're called a stop loss and stop limit. I don't want to confuse you with too many things in the beginning stage. Stop loss is when you have a stock and you want to sell it, you kind of put a stop loss so that you don't want to sell it below a certain price. And similarly, when you're buying, you don't want to buy it below price. Like it will get triggered only after the stop loss price is reached, the price you set is reached. The order itself will get triggered only after that price that you have set in the brokerage is reached. So these things are stop loss and stop limit. It's a little more complicated. We don't need it at that stage. The best option to use right now is a limit order to place your stock trades. Another thing that you should know before you place your first trade is the time and force. Like, what is the validity of the order that you're placing now? There are different options given by the brokerages. One is called as a day order. So in the case of day order, it cancels at market close if not executed. The order is valid only for today. So you give an order, say, let's take the same example, Apple 153, you place 154 to buy, and if it doesn't get executed by the end of the day, it gets cancelled. And the second type is a good till cancel order. In this case, the order, the same order that you place now is open for 180 days and then gets cancelled if not executed. But most probably if you give a reasonable price like 155 for Apple, it will get executed in a day or two. So good till cancelled is also a very good option to use if you are willing to wait a few days for your order to get executed. The next one is fill or kill, which is also rarely used when you want to immediately execute the order, either a buy or a sell order. If it doesn't get immediately executed, it gets cancelled. As soon as it reaches the market, it has to match. Say if you gave Apple 153 is the price you are given, and when it goes to the market, the Apple price should be 153 or below. Then only it will get executed. If not, it will get cancelled. And the fourth one is immediate or cancel. In this case also, it kind of fills as many shares as possible and cancels the remainder. It doesn't keep the order open. And the fifth option is on the open. This order fills only at the opening price. When the market opens at say 9:30 in the morning, whatever price that happens at that time will be the price at which it will be executed. And similarly on the last one you have on the close. This will get executed at the closing price. The last four options like fill or kill, immediate or cancel, on the open, on the close are not widely used. The most widely used options are day order and good till cancel.
Once your brokerage account is set up, you can log into the brokerage account using your user ID and the password. Here you see that I have logged into my Fidelity account, and on top you see the search or get a quote option here. Here you can enter the company name, or if you know the ticker symbol, you can enter it. In this case of Apple, let's say you don't know the company name, you just type Apple and you will see the Apple ticker symbol here. Click on that and it brings the stock price and various details of Apple. Now there is so much of information out here. We will cover some of those items in a very detailed video in the future. But here I would like to show you some of the key items which you should know before placing the order. One is the bid size and the ask size. Bid is the maximum price at which a buyer is willing to buy the stock. In this case, it is $150.52 and the lot size is 10. And ask is the lowest price that a seller is willing to sell the stock. And in this case, the seller is willing to sell at 150.56 and the lot size is 3. So you see there is a difference of 4 cents between the bid and the ask. When the quotes keep coming up frequently from other buyers and sellers, and when they match exactly, then a trade happens, and that is your trade over here. And this is the open price as of yesterday when the trading happened on Friday. This is the opening price in the morning. And this is the previous close, which is 150.43, the previous day's close. And this is the volume, which is 96 million that was traded yesterday. And this is the 10-day average volume, which is 104 million. So you see that the volume is close to the average. If it is exceedingly more, like 140 million, then there's a lot of buying activity going in the Apple stock. And this you see is the days range ranging from $148 to $151. So sometimes if it is very volatile, it could be even $5 or $10 range. And this is a 52-week range. Here you see this was the low that was reached on June 16, 2022, which is $129.04. And this is the high that was reached on January 4, 2022, which is $182.94. And this is the equity summary score, which is 5.1, which we'll cover in this section. And then this is the P by E ratio, if you have watched our video covering the session 1, the basics of stock market, so there we would have covered about P by E ratio. If you have not, please watch the very first video. And P by E in this case is 25.24. That indicates like whether the stock is overpriced or is recent or is underpriced or is correctly valued. And the market cap, this is a large cap, $2.47 trillion. We have also discussed in our session 1 the large cap, mid cap, small caps, and various stock types we have discussed in our session 1 video. Please watch it if you have not done it. And the sector is information technology. And then let's move on to the chart here. This is a 1-year chart, so you see the prices have been pretty volatile, going up and down. And this is the low that was reached around June, around 129, June 16th, and looks like this is the high that was reached in January. And of late also the price is coming down with the recent Fed rate hike. It is expected to maybe come down a little more also. I have also a separate video, I think the video 3, session 3, which talks about the Fed rate and the impact of the Fed rate. Do watch it to know the impact of the Fed rate on your investments and finances. And you could move. This is a 1-year chart. You could click on anything like a 5 years, and you can see how the stock price of showing up over the last 5 years, how it has been moving in the last 5 years. This will give a good indication. It's been mostly going up except for the last year where there's a lot of volatility and it's been moving up and down. And so this will give you a good indication of the stock price movements. And then now let's move on to analysis and sentiment. This covers more the fundamental analysis where it says the valuation as of now it looks like considering the current market conditions it's a little overvalued. So it's on 73 on a scale of 0 to 100. And the quality, Apple, as everybody knows, is a very good company and the quality of the stock is pretty high. It's around 89. And the growth and stability is kind of, I would say it is good, but it is still, as per the analysis here by the brokerage, it is little on the lower side, around 21. And the financial health, it's a solid company, so it's around 58. They look at various parameters and arrive at these numbers. Okay, so let's move on to analyst opinion and reports. So here you see the score is 5.1, which is around 3 to 7 is a neutral range. So it's neither bearish or bullish. But to me, it's kind of it's going down. So it's leaning more towards a bearish side. So that's about the analyst opinion. And then the next tab is about comparisons. This compares Apple with different other stocks, top competitors. They may not be real competitors, but different stocks. Apple, HP, it compares with HP, Cisco, and their corresponding scores and the performance, and Motorola Solutions and Intel. So these are the comparison and the corresponding numbers. And this tab, statistics, gives about information about the ownership. Like institutional ownership is pretty high with Apple around 38%, and institutional mutual fund ownership through mutual funds it's around 20%, and separate mutual fund ownership is 3.2%, insider ownership is 0.1%, and others where the public comes into the picture is around 39%. And some key statistics are there. We will not go through everything, but some like market cap, which we already know, and P by E. This compares with the industry average and where we stand percentile wise with respect to the industry. If you see market cap, it's almost at the top 100th percentile. P by E is also pretty good, around the 91st percentile. And EPS growth is 18.59%. This is TTM is trailing 12 months versus a prior trailing 12 months. And it is comparable to the industry standards. EPS growth last 5 years is 21.98, slightly better than the industry standards. And gross profit margin is 46.21, which is also slightly better than the industry margin. And earnings before interest, tax, and depreciation, which is 33.43, is also slightly higher than the industry average. So all these indicators give you a good idea about the stock, and based on which you can make a decision whether to buy the stock or not. So let's try to place a sample trade here, and you can understand how to place the trade. Okay, so this is where you go and click when you want to buy a stock, say buy a stock of Apple, you go and click over here on this symbol buy. Once you click on that, then this window opens up where you see the Apple stock here symbol and the price and the bid and the ask price is here and the volume is also there. Now the action here you can say buy and sell. And if you have already stock you're owning, then you can sell specific lots. We will come to those in a later advanced sessions. Let's focus only on the buy and sell here. So click on buy, and then you put the quantity here. Let's say we want to buy 10 stocks of Apple. Okay, so click on 10. So order type will be focusing on the limit orders, which is the safest for the beginners. You put the order type as limit, and then here you enter the price. Say you want to buy Apple at a price which is slightly lower than the current price. So you can put 148, which is roughly around $2, 50 cents below the current price. If you feel that it is too low, you could adjust that. You could make it 150 or 149 as your limit price. And the day in force also, the time in force also we went through in our slides before. So we have all these options. We discussed that. So either you can go the commonly used day or good till cancelled. If you want to buy this Apple stock with the next trading day, then you can just put day. Or if you want to wait even a couple of days when the price fluctuates and comes down a little, then you could have good till cancelled. And most probably this will get executed in a day or two. So that doesn't, you don't have to come and place the order again for the second day if it didn't get executed in the first day. So this is also very popular good till cancelled. And there are conditions you don't have to put anything. And then the trade type, you can put cash. Only if you're an advanced trader, I would suggest you to look at the margin option. For a beginner, focus only on the cash trade. So it says that the total amount is $1,490. Okay, and you can click on this preview order, and you will see the prices that you entered and the quantity. You can validate everything, and once you are clear with everything, you can place the order. In between, in case you want to edit the quantity, you can click on this edit and you can adjust the quantity or the price if required. Now you're all set to place your first order. You can go ahead and click place order, and you will get a confirmation that order received. Buy 10 shares of Apple, limit price at $142, $149.
Congratulations. Now I'm sure you will be very happy to know how to place your first trade and will be eager to very soon start placing your first trades in the brokerage. So once again, congratulations on learning this, and look forward to teaching you many more things on investing. Thank you.
Other videos that are coming up: how to buy your stocks using a brokerage account. This is very useful for beginners and first-time investors. Traditional IRA and Roth IRA, and how do you invest in them for the people who are interested in the retirement investing. Simple index fund investment options: stocks, mutual funds, ETFs, and bonds, and how to invest in them. Dividend stocks and how to choose the dividend stocks. What are options? The basics of call option, put option, and covered calls. Fundamental analysis of stocks. Technical analysis of stocks using basic chart patterns. Candlesticks, like Doji and how to use them in your investment, how to measure your portfolio performance. So many more video sessions coming up to teach you a lot on the investing related topics. If you like today's session, please click on the subscribe button and click on the thumbs up button to show that you like this video. Thank you for watching this video and see you soon in the next video. Disclaimer. These videos are strictly for educational purpose and do not provide any advice, tips on investment or recommend buying and selling of any stocks, options, ETFs, mutual funds or bonds. We neither take guarantee of profit nor stand responsible for any losses of any recipient. The recipient of this material should get their own professional advice before doing anything based on this information. The recipient is advised to read the above information carefully before any investment and taking any decision on that.